Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. All right, starting out as always with the S&P 500. We are going to, what's interesting about this one, okay, we talked about this certain retracement line back in, when was that, July. And so basically here we got the 50, 61.8 and 78.6. Generally speaking, when you take the high here down to the low, 100% retracement would be from down here around 35 all the way up to 48, right? Well, if you take the 78.6, it broke through that back in July. We've broken through that again. I think about 7 out of 10 times here, 70% of the time, this is going to go up to all-time highs. Generally speaking, when you have a retracement like that that breaks through the 78.6, it's going to go past 100. And now we said last week that we thought the S&P 500 was going to flatline or roll over. We were wrong. It went up about 1% for the week. I still expect it to roll over this week, possibly the next, but I do also expect in the next few months the S&P 500 to reach all-time highs, and it's strictly a technical bet. There's nothing to do fundamental with this. Fair value for this is below the COVID lows, so around 1800, okay? So we're still in the clouds, but I think we're going even higher into the clouds. All right. So buyer beware. All right. The dollar DXY closed the week at 103, down slightly for the week. Now it's just hanging around. See this little purple line right here? That is the 200-day moving average, one of the strongest moving averages. It's just hanging around right there. Does have low RSI, MACD is low. And you know what? There might even be a retracement here. Let's see what we got. No, not quite. This is 78. We want it down here. Oh, I'm sorry. No, that is right around a Fibonacci. So we could see a bounce here in the DXY. Our bias to the dollar is the upside in the short term. Expect it to kind of hang around this 200-day moving average, possibly trade around like 102 or so. Next real level of resistance down is going to be 101, and then after that about 99.50. But our bias for the dollar is to the upside. All right, gold. Gold is really keeping track here. Pretty cool. It closed above 2,000 in the weekly time frame, which I believe the last time that happened was in March, or was it May? It was one of the M months. I'd have to go back and look. Yeah, pretty exciting for gold. I think we are getting very, very close to some new all-time highs. We've had this triple top right here. I don't think we're going to have a quadruple top. I think it's going to blow through it to the upside. RSI is a little high, MACD is a little high. We might have some consolidation here, maybe back down to the 200 moving average. But, you know, we've been putting a lot of effort, since uranium has had its run up, we've been putting a lot of effort into finding the next uranium. And, you know, is it coal? Is it oil? Is it natural gas? You know, could it be copper? I think the answer has probably been in front of us this whole time. And just because we have a habit of being way, way, way early, it's probably gold. You know, if we're all, I think just about everyone watching the show is pretty well positioned in gold. And I think I think that's probably going to be it. All right, we placed a leveraged gold bet, or at least what we thought was leveraged, on Sandstorm Gold back the last time gold had a little dip in early October. And wasn't nearly as leveraged as we thought. We might be closing our position here next week in Sandstorm. After asking Rick about the company, he has a much better understanding fundamentally of this company than we do. And we're up a few percent. I think we're just going to close it and move on. Another gold royalty company that we like, now this is a very small market cap. We'll go to the financials here. It's only worth 90 million. Okay. So very, very small market cap, limit orders only. We had these limit orders. We talked about these before after the Rule Royalty and Streaming Bootcamp. Put these limit orders in. So we got one up here at 48. Another one hit last week at 45. We have another one in at 40, and then at, at 43, and then another one in at 40. Now, look at how these go. This market cap is so small. I'm going to go out to the 30 minutes. So each one of these bars is 30 minutes. And this was probably one guy selling his position, right? So he sold. He had enough shares that it drove the share price from like 48 all the way down to 42, and then it shot right back up again. And I over the other day, I brought up the 5 and 1 minute chart. So this was just for a hot minute. So one guy probably sold, a whole bunch of limit orders hit on the way down. Ours was one of them, and then it shot right back up to the price that it was at. So limit orders only on this one if you're going to get in on Origin royalties, and hopefully this will be do quite well during the gold bull market. All right, moving on to silver. It's up about 2% for the week. Looks like it's forming up a bull flag right here. So generally speaking, when you get a spike up like that and then kind of a consolidation down in a channel like this, that's what we call a bull flag. RSI is getting pretty high. MACD's, it's up there. But would like to see this consolidate down again so we can buy some more and then hopefully run up. Maybe it'll pierce through this. I don't think so. Our bias is to the downside, just technically speaking. But yeah, silver had a heck of a week. PSLV, we talked about last week. We closed our position. Well, not all our position, just our trading position here. If this consolidates back down or so, we'll look to open up another one. SILJ has had a nice turnaround. Here's our positions in this. Had a little double bottom here. Could have caught it there. Would like to ride this one up just a little bit more. RSI isn't quite there. It's around 60. MACD isn't quite there. I mean, you can see some real blow off tops back here with the MACD really coming up. But we want to let this one ferment a little bit, marinate, and we'll make a decision next week. Copper had a nice little bump here. Closed the week at $3.78. Is getting a little stretched. RSI is a little high. MACD's above the white line. Yeah, not really seeing anything. What is interesting, though, I will say, is here's the purple line here. You guys know what that is. That is the 200-day moving average. It's just got to pierce through that and then kind of settle on it and start using that as support. Right now, the 200 moving average is resistance. Leveraging that on COPX, the copper miners ETF, made a purchase a couple weeks ago. It was a tick if you could catch it down here around 31. Settled the week at 34.49. We'll call that 34.50. And don't see any buys here. I think we need to be patient with copper. It's possible that copper already has the recession priced in. Personally, I don't think so. I think it's going to turn around and to the downside. Would love to see this come down around here. I mean, this would be a boatload of support right around 27. I don't know if we'll get there or not, but if we do, I think that would be an amazing buying opportunity for this ETF. Arizona Metals, even more a leveraged bet on copper. Here's our entry points. We're just getting this all the way down. I gotta say, if you have been debating getting a entry into this company, we did right about the same point a couple weeks ago, but MACD is in the toilet. RSI is just now starting to turn up, and we can see that these are just starting to move into the green zone here. See how this is going red and then just into green? And then this one right here, the RSI is just starting to click up. Yeah, if you've been debating putting a position in on this company, the technicals are actually starting to look somewhat decent here. I like these indicators right here. And we essentially placed the same bet back here because it's at the same price point. But yeah, if you don't have one yet in Arizona Metals and you've been debating it, I would fire Monday. All right, uranium had a heck of a week. We are, according to John Quakes, it's up to $80.95. We're going to round up and call that $81 for the spot price of uranium, and just absolutely killing it. SRUUF is just a absolute boss here. we're going to go to the Sprott Physical Uranium Trust website. We are trading at a 4.6% discount to NAV. So if you don't have any physical uranium, there you go. You can buy you can buy $100 worth of uranium, but it only costs you $95.40. So a deal. And look at this. We have a new number there. That's number 7. So in the last week, we have purchased another 100,000 pounds of uranium, taking it off the market. Love this vehicle, and I will show you. You actually see a down arrow there. That means that we sold. We actually sold a little bit of uranium. Our average price into this ETF, it closed at 1929, was I think $11. We had a couple back up the truck moments when this fund got down to like 1050, which was like 80% of our purchase of this thing. And then after that, you know, we're just piddling around, you know, 11, 12 bucks or whatever. But we did sell some of this uranium, and not a whole lot. I think we sold about 10% of it. And we're putting it into some limit orders on coal, which we'll get into in a moment. All right, Cameco. Cameco is starting to float among the clouds here. It's up a tiny bit for the week, not a whole lot. Actually, no, I take that back. It's actually down a tiny bit for the week. Well, if you take Friday, whatever, we're about even. Good enough for government work. Is a little bit of a double top there. I'm going to move out here to the weekly so that we can kind of get an idea of where we are long term. And you can see, okay, we got a point right here in February 2011. Then we got another one here in April of 06. We are getting pretty high in the clouds here, okay? So super high RSI, way high MACD, and Peter Granish calls this one a strong hold. I suppose fundamentally it is. I'm just saying technically it looks really stretched on the charts. So, you know, if I don't know if you got in down here or something and you want to do what Rick calls past the point of no concern and, you know, sell whatever your original buy-in was and just keep the rest, man, I think that would be a fantastic idea. Their dividend isn't all that great, but yeah, we're really getting stretched here in Cameco. Because Adam Prom, absolute boss. Their dividends are amazing. Okay, the great dividends. I love this company, and I just hope my government continues to allow me to own it. It's pretty much sideways, but what I do like about this chart is that it's pretty much obeying this 50-day moving average right here. So we're not buying any more. We're just holding what we got. But maybe we'll get a washout and get lucky and it'll go back down to the 200. Kind of doubt it. But you know, maybe anywhere along this 50-day moving average, you know, it's just holding that as support. URA, the uranium ETF, has about 70% of its holdings in uranium. The rest are random things like Mitsubishi. Yeah, just kind of getting up in the clouds. I mean, we've been just saying this every week that like, oh, we should have a correction here, and we really don't. I mean, the most it does is come down to the 50 and then it just goes right back up. I think it's just because uranium has gone from being completely ignored to now like people are looking at it. And that's what that's what this equates to on the charts when people become interested. Don't see any buying points, not selling. Yeah, we'll leave it at that. URNM, same kind of thing, although we are just about there. I mean, I closed the week at exactly $50. Yeah, I mean, this right here would be all-time highs right up there at 51.79. Maybe we'll hit that next week. I don't know. I mean, if the price of the commodity keeps going up like it is, we probably will. All right, Uranium Royalty Corporation. Love this company a lot. Had two back up the truck moments right here, and it looks like we're ironing out for a cup and handle. You know, was hoping, we still have our limit order for $2.50, although probably a pipe dream. I doubt that's going to hit. This cup and handle pattern looks like it's ironing out quite well. And let me get these out of the way so you can actually kind of see it here. I just love drawing on these things, so I left it. But look, we're about to exceed this top part of the cup right here, maybe we'll hit it next week, is pretty high on the RSI. MACD's not so bad, but yeah, I don't know. We had a golden cross back here, which ironed out pretty well. I would expect this to continue to climb. All right, moving on to natural gas, Devon Energy. Might be an interesting buy point. There was a tick if you could catch it on Wednesday. I'd say anywhere around $44.50, something like that might be a nice limit order. There is a lot of support right around that level. And this company pays great dividends. Equitable, another recommendation by Rick Rule. Yeah, kind of same kind of game. I still see, kind of any limit order right around 39.50, somewhere in that ballpark. You basically kind of want to catch this anywhere like around that line. Okay, anywhere around that line, I think is a pretty good deal. MACD's low, RSI is about middle of the road. So if this were to touch down on that white trend line, RSI would probably be around 35 or so. Tellurian, okay, put a trade in on this actually, and let me get rid of some of this noise here. So we're going to get rid of the volume. There we go. Now we can see it a little bit better. Okay, so I called up Daniel. He and I put in a trade on this. We got it at, I believe, 50 cents, and we have a stop at, what was it? It was 49 and, no. Yeah, it was 49 even to 48.50. So we put a little gap in there just in case it gapped down 25 cents or something, we'd still be able to sell it. But yeah, we were talking about last week. I can't remember who brought this up. Oh, Topper did. Topper brought this up and I was like, we might actually trade this. And I called up Daniel right after I did the show and he's like, yeah, I see the same thing you do. So we basically, this trend line right here, if it gets below that and goes down to basically 49, it looked like it hit it right here, but luckily it didn't sell. It wasn't there quite long enough to create a sell. So if it gets down to 48.50, then it'll stop us out. But minimal loss. Pretty. I like it as a trade. All right, moving on to crude oil futures. All right, close the week at 75.54. There was a tick down here if you could catch it at 73. We were looking at that. We just never fired. Probably should have. Now it's below the 200-day moving average. Our bias here is actually towards the downside, although MACD is just starting to turn up. RSI, I guess I'm 50-50. There is quite a bit of support here around 73, and then again down here at 78, and then, man, that would be great if it would get down into the 60s. Yeah, I think our bias down here is slightly towards the downside. And then leveraging that on XLE, this was a trade that didn't work out. Just closed above the 200-day moving average. RSI is middle of the road. MACD is angling up. If crude actually goes up here, this should do quite well. If it doesn't, then I would expect us to come back down here and touch this trend line. Exxon, our favorite oil company and yours. RSI is middle of the road. MACD is starting to angle up. So a lot of this is just going to depend on the commodity itself. But this 400-day moving average has been pretty reliable for years. Yeah, I don't know. I mean, there's a lot of support right around here on this 400-day moving average. So if you don't have any position in Exxon, I don't think it's a terrible time. MACD's pretty low. RSI's middle of the road. I would prefer a limit order on this, maybe 102 and then 101 if you get lucky. Blackstone Minerals, still got our limit orders in. 2 of them have hit. Waiting on that third one, the $16.55 to hit. It probably won't. But if you don't place it, it'll never hit. So might as well have it in. Amazing dividends. This company is just a rock star. We're going to hold this through the oil bull market. And I don't see any buy points right now other than, you know, if you just want to start placing limit orders, basically $17 and below, I don't think that would be a mistake. All right, tourmaline, we brought this one up last week, and I believe this is the correct ticker. We're not talking about a bio company or anything. All right, so anywhere along this trend line, I think is pretty good. Close the week at about $49. Low MACD, low RSI, and they're starting to angle up. So that's why I kept this one in here is, you know, I mean, it's just hitting right along that trend line, you know, in a couple weeks, we're probably going to be up here at like 52. And, you know, I don't think this is a bad buy point at all, especially, I mean, look at this. I'll just draw in a horizontal right there. You got a lot of resistance right here, right where we are at now. All right, now this was one that I thought was interesting. This is uranium and oil. So uranium is up at 80 bucks and oil is at 75. So now uranium is actually more expensive than oil. And if we go back here, we can see the last time this happened was 2020. And then the time before that was way back here in 2016. So this is kind of an interesting moment. I don't know if it's anything that we can trade on. But it is pretty incredible that now uranium, after 3 years, is finally more expensive than oil. And the bet that we sold uranium for and put into coal, this is Glencore, so this will be our beta play for the coal bull market that we believe is coming. And so remember we said last week we think this is going to roll over, so we got a limit order down here and at $10.50, and then another stink bid down here that probably won't hit, but if you don't place it, it'll never hit. We got one at $9.50, probably a pipe dream. But I think this one down here is probably going to hit the $10.50. I mean, the likelihood of that hitting in the next couple of months, I think is very high, probably 80%. You know, there's just a huge confluence of support right around that line. So you can see this trend line I drew at $10 and I guess 48 cents, we'll call it 10.50. And then also this upward trend line right here, this yellow line that has been decently reliable. And that is kind of the confluence of our first limit order bet that we're hitting. So we would expect this to roll over, touch that, hopefully bounce off of that. And if it doesn't, come back down here. In the meantime, we collect a dividend. All right, Clifton wanted to know about XLU. Okay, so this is an energy ETF. And basically, here's some of their holdings. Nextra is their biggest holding. Then you got Southern, Duke, Sempra, American Electric, Constellation, Dominion are some of their biggest holdings in here. So this is essentially, this is a utility play, right? So betting on the utilities, electricity. As far as an entry point right now, I don't see one at all. I would want... Yeah, if anything, I see resistance. I might almost want to short this, to be honest. Not saying that this is a bad fund at all. I'm just saying, you know, as far as an entry point, I just don't see one. I would want to see this consolidate back down. The one bullish sign that we do have here is the 21 is crossing over the 50. But I mean, RSI is at 60, MACD is above the white line. Yeah, I just don't see it here. I'd want to see some consolidation here. Maybe we could get some kind of retracement or something coming back around here. We want to see some kind of double bottom. You know, if you want to do the beta easy play in utilities, this is certainly it. I just don't see an entry point right now. All right. Well, I hope you guys got something out of that. Support the show. Hit the like, the subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy who can't stop talking about tech stocks.